Hey folks, welcome to Pro Trader Strategies. It's Friday, August the 27th. I'm Eric Wilkinson and we are an educational company. So what we're here to do is to talk about option strategies so that you can learn to implement those into your portfolio in your own way. So before you go, hit the subscribe button. There's a little bell right down there next to it. That will give you a notification if I pop in here unannounced. Later on in the afternoon, I might just do that if I find a trade or something to talk about. I will pop in unannounced every once in a while. Smash the like button. It really does help us out. And throughout this video, comment down there, folks. Let me know what you want to look at. I'll throw it up here on the charts. We'll go through it and maybe find an option strategy that we can implement around that given assumption. All right, so let's get on with the economic data across the pond. Really not a whole lot of economic data from Europe or anything like that. Really what we're concentrating on here is the United States, the Jackson Hole Symposium. A couple of economic data points we'll go over real quickly. First off, we got the core personal consumption expenditures. That's the PCE. Now remember, we do consumer price index. That affects us, but this really is drilling down on the consumer like you and I and what the prices are that we are paying. We saw that in line with expectations at 0.3%, although we did get a nice revision to last month's number, a little bit higher by 0.1% there, making that headline number look a little bit better there. Here in the United States, again, we have personal income. That came in at 1.1%, a lot better than the 0.2%. I think that's really what's giving the equities a move to the upside. They are getting that income, not necessarily spending right now, coming in the personal spending a little bit lower than expected at 0.3%, expected to be 0.4%. They did revise last month's number up, making up on that headline number there, missing it at 0.1%. But that real talk is about the personal income. That is going to be pent up spending coming around the corner when we come out of this pandemic. Maybe people are saving a little bit more right now, but I do believe that there is going to be some spending going on. We're seeing inventories already start to move. We saw the preliminary wholesale inventory number coming in at 0.6, expected to be 1%. So that means they're moving some inventories. I've talked about this in the past couple of months. We saw those inventories actually start to creep up a little bit. And I said it was a little bit out of the norm to see those inventories start creeping up this early ahead of a holiday season. Well, we're starting to see some of those inventories start to move now. University of Michigan consumer sentiment, the lowest level we've seen since coming out of the financial crisis in 2011. December 2011 is the last time we saw a number anywhere close to 70.3, which is what we got this month. It was expected to be 70.9. So we were expecting the consumer sentiment to come off, but not quite as much as we're seeing here. And we're also seeing that consumer sentiment as the lowest level in the last 10 years. Jackson Hole Symposium, Powell basically talking about the taper, folks. He's saying that a lot of these Fed governors are trying to push for September taper. He's thinking more November. They aren't really talking about it amongst each other. They're only internal thoughts that they're expressing now at the Jackson Hole Symposium. Will this start to happen? I still believe that we're probably not going to see this taper happen this year. If we continue to see economic weakness, economic data coming out that's weaker than expected. Now we're seeing some pretty good ones today, but we have been watching some of these manufacturing numbers slug a little bit, be a little bit sluggish. So that's really going to be the catalyst. Consumer income needs to transfer over to some spending there for us to get a real good boost here in the markets. All right, crude oil starting to make a little bit of a move higher here today. Then we move over to gold futures, seeing some strength here as the dollar, the US dollar, we've been talking about that, right? It has been weakening as of late. Last couple of weeks, we were seeing some strength coming into this week, basically starting in the last 5 or 6 days. We're seeing some weakness creep into this market, a high of 86. It's right around 85 now. So is that really driving gold here? I would say that that's probably some of it, but most of it has to do with a bit of safety here. We're at all-time high, folks. We've been talking about risk being to the downside. These folks that are trading this stuff are seeing the same kind of levers and pulleys that I am. Manufacturing looking a little bit weak, so they're trying to hold on to some safety there. Now, bonds, everybody talking earlier this morning was talking about a really early taper starting in September. Powell came in and kind of squashed that a little bit, talking about November possibly, but they have not been talking about the taper amongst themselves as of yet. They've only been talking to the media, maybe trying to be a little bit more transitory there. Well, we can see the VIX coming off because we have all-time intraday highs here in the equities. The NASDAQ making that high intraday, which makes that a good charting point. If it makes any kind of pullback or anything like that, that new high is going to be something people will set the charts up against. Even the S&Ps are going to be higher as well. Dow Jones up 200 points, very close to the highs of the day. Here we are looking at 2 ticks away from the highs that were set during the day session here in the E-mini S&P. So everybody happy today. Markets up across the board. And we've got the E-mini S&P breakdown here. This is a 30-minute chart here with the candles lining up. You know, all week I've talked about this. It really feels like an inside day. We haven't really gone anywhere the entire week. Yeah, we've continued to make newer highs and things of that nature, but we aren't really making massive incremental moves to the upside here. Stocks are doing very well across the board though. So let's talk about the travel and leisure. That was a weak point that we were talking about. I was saying that the casinos especially were doing well despite the fact that they weren't at full capacity. They've learned to streamline their processes and increase their overall profit. So I was saying this was an opportunity to get involved in some of these casinos. Penn starting to make a move to the upside. So any of this travel and leisure as of right now, Las Vegas Sands was one we played to the upside. I got out of that one. Wynn, all of these look very similar. As a matter of fact, Caesars was the one that really got me on this whole kick with the casinos doing very well after their earnings. And you can see Caesars doing very well across the board. I can just about click on any of the casinos and it filters over. We were talking about the travel part of this. The airlines, they've done pretty good, not quite as well as the travel and leisure aspect of the casinos, but we can see the airlines are starting to make a move to the upside. I just wanted to talk about that because I've got Penn in my overall portfolio. You guys have known I've had it forever, lowered overall cost basis, doing covered calls and all of that stuff. So I wanted to touch on that. I'm still in there. No covered calls as of right now. Bank of America, though, this is a trade that I kind of butchered in my IRA. What happened was, if you guys remember back on this last month on the 23rd, right around in here, I decided to start playing some of these banks to the upside here. And with that said, playing this to the downside, trying to lower overall cost basis on this, not obviously working out. So I had gone into the Augie Ox, so the October 43 puts, and sold the August 36 puts for that put diagonal. Now, I've talked about this a couple of times here. Those 43 puts in the October that I bought, I ended up paying $5.75 for those. The August 36 puts against those collected 43 cents. If you guys remember, then on the 6th of August, I rolled those puts when we started getting this market move, got out of my August, rolled those into the September, collected another 34 cents for those. And then covered those today for 7 cents. All right. So lowered my overall cost basis on this trade by about 65 cents. So today, trying to put an order in there to get out for basically a scratch of my October 43 puts in there for around $5. It did not work out very well. The market obviously starting to move to the upside. I tried to put that order in, change the price on it, and executed at $2.21. So I'm out of that trade in my IRA. I'm still in it with my trading account. I'm going to let that one ride out. SPY upside here. Guys, remember I played this selling some puts in here for a bullish directional assumption when we broke back into the trend channel. I still have those on. I'm got a working order to get out of those for about 30 cents. I'm about 50 cents away, so it's not really super close. I just wanted to throw this up there that I do have a working order to try and get out of this. Something else to talk about here. The reason why we use options here, folks, in a situation like this is because when we're seeing, sorry, I'm trying to find my pin here. There it is. Oh, there we go. If you had gotten into this as a long for using the ETF, or if you got long something like this, if the chart looked like this in the future, then we would have gotten involved into a long trade right here as soon as we broke back into that trend, right? And we've gotten that move. But yesterday, that breakdown would have gotten most people out almost immediately, not being able to play out the follow through today, because the idea would be you get out below the previous day's low on a stop, basically, on your out. And we saw that yesterday we did make that move to the downside. So a future or somebody that had the underlying would have been shaken out here. But because we're short puts down here at this level, this is where we're short our puts. You know, we haven't even been close to being tested on this. So we're able to stay in this trade a little bit longer. You're able to stay mechanical because you know your probabilities of this 415 trade in the next 20 days is very unlikely. So the volatility, all of that stuff coming out of this trade is working out quite nicely. And the other thing that I do have a working order in, and I thought we'd probably get filled on before the end of the day here, is in my Las Vegas Sands trade. And I talked about it even maybe ad nauseum yesterday. But if you guys remember, I had sold some puts in here twice because we had this extreme high volatility in here. I got involved with selling the September 35 puts. My average on this trade, folks, is right around 79 cents. So let's just go with that because I did it twice, once for 68, once for 90. I am trying to get out. I'm working an out at, I think it's 7 cents right now, is my working order to get out of these trades. For 79 cents, trying to get out for the 7 cents. It hasn't gotten filled as of right now, but that's a working order. I probably won't even pop back in here, folks, just to tell you that I got an extra penny out of it. So that's a working order right now, trying to get out of that. And finally, let's talk about Apple. It's all the news, right? Apple finally coming out and having some concessions here with the developers, right? The developers, if you guys know, they've been getting beat up on the cost of having an app on Apple's platform with a 30% take. That was something that was really hurting some of these smaller app developers. Apple finally came out and said, well, we'll give you guys a break. If your revenues are below $1 million, we'll only make it 15%. Well, it does not affect very many people at all. So really what they're doing here is a marketing stunt to try and say, hey, we're bending a little bit. We're trying to help people out. But for the epics that actually brought this to light, they are not being compensated whatsoever. So the payment system still pretty much the same for everybody else. One of the other things that Apple will now allow is direct contact to the consumer from the app. Usually it had to be an in-app thing so Apple could keep their eyes on it. Now actually they're allowing these folks to really directly reach out to the consumer rather than to have to wait for the consumer to come back on their app and look at a message from us or something like that. They can be a little bit more proactive in that regard. So all in all, mixed bag on what Apple said. For the most part, it was just a marketing ploy. I think that they're just trying to save a little face here, but it's really not affecting some of these other folks that are that were a little bit angry to begin with. All right, that's it, folks. I hope you guys have a great weekend. Computer is coming, so we'll be back online with our webinars coming up shortly. So keep your eyes out for that. But before you go, make sure you guys hit that subscribe button. That little bell will give you an indication when I pop on unannounced. If I get trades and stuff like that or find an opportunity out there, I will pop in unannounced. So if you got that notification with that little bell clicked, you will know when we're popping on. And smash the like button before you go. Comment. I'll circle back around, make sure everybody's clear of concept. Have a great weekend. And if you can't take that, take it easy. Bye for now.